Hello everyone, welcome back to the Rational Investors ongoing tutorial series using the Coinigy platform. Today we're going to be looking at Fibonacci extension levels. As we have done recently, we're working off of the Bitcoin Bitstamp one-day chart on the Coinigy platform. For the purposes of this tutorial, we will put away the extra information so we can concentrate on what we see on the price chart. We're going to scroll in so we can see the price action close in. We're going to take our mouse and we're going to scroll down to the third box down on the left-hand side of the pane to Fibonacci retracements. We're going to, in this particular study, we use the extension study. So we're going to actually change the name of the labels from retracement levels to extension levels. We're going to draw, in this particular case, say from this high down to this low, an initial move. And the question we want to ask ourselves when we're using this particular study is how much of the previous move are we likely to see replicated should the trend continue. So our assumption here is that we have a trading range, top of the range, bottom end of the range. And we're not looking for a retracement or a pullback of this range, but we're asking if this market consolidates and then breaks lower, how much are we likely to see the market move forward? And are there any specific levels that we want to keep in mind as the market does move forward? So in this particular case, you can see, and these happen to be the levels that I teach students and we use extensively on the site, therationalinvestor.com. But they are specifically the 113 level. So that's 113% of the range. 1.272, or basically 27.2% of this range on top. 144.5, which happens to be the midpoint between 1.272, and you can see this particular case it's colored dark, but 1.618 in mathematics is called the golden ratio. So that's a very important level for Fibonacci extensions. Of course, we saw in the retracement module the 0.618 level and its significance. And then finally, I personally like to follow 200%, or basically a replication of this range going further. And quite often what I've found in my experience in the market is you will often get a range extension that is somewhere between the golden ratio, 1.618, and that 200%. In fact, in my education programs, I like to call this the parking garage. Why? Because you can think of price structure in the marketplace as nothing more than, like a parking garage or a department store. In previous bull cycles, we had a lot of fun with different assets moving from various levels of the department store or parking garage to the next level. And you notice that basically 200% is nothing more than just a replication of that range. We often see this in the markets, especially around things like what they call head and shoulders price patterns. Of course, it's always a trick to find them as you're talking away here. But here, going back in the past, you'll see a couple good examples. So this range, for example, you can see we have a clearly defined top. Basically top end of the range, pull back here, and then drawing our extension levels. I think you can clearly see that 113 was a very important level. Market bounced off of that smartly. 127 down the road came into play here. And then ultimately, you can see how the golden ratio, 1.618, played a very significant role in here. And ultimately, you could make the argument that this consolidation up top here, this trading range, really wanted nothing more than just to replicate itself down below. So you see that ultimate downside objective, 200%. And you can see we hit that level and then we reversed nicely. So as I said there earlier, quite often what I do when I'm working with my students is I encourage them to draw these kind of boxes on their charts and call this the parking garage. And it just gives you a visual reference of where the market is likely to find key support going forward. And I think that was a pretty good guide. You can use this in very large ranges. You can also use this in relatively small ranges. You notice that we have a nice consolidation pattern here. You can also argue that this is a bigger consolidation pattern. And notice if we, for example, go there to there. The trading range here, expressed as an extension, you can see we rallied up into 144.5, then pulled back. Could even do a bigger one. Go from here. Actually, here, let's go there to there. So, nice extension level there. I think we could probably also go off of there. That's a good one. Notice we rallied up into the parking garage. And in this particular case, notice how we actually replicated that range again, up to 300%, and then again up to 400%. So again, thinking about that, the market is nothing more than sort of a ranging mechanism. We can say that's one trading range and another trading range and another trading range. Quite often what you'll find is these levels start to sort of stack up, if you will, on each other. So not a big surprise. Probably we could even do 500%, and that probably takes us right up into that top there. Come on here, hit 5. There is 500%. Pretty much nailed the top up there. We can also now, since we've hit this top up here, you can see this looks like a very well-defined head and shoulders top. To help us see that a little bit better, you can always use the head and shoulders drawing tool, something along those lines. I think I would actually prefer to use that high, to be honest with you, something along those lines. It's not bad. Ideally, you'd like that head and shoulders to be as symmetrical as possible, nice and flat. Now, watch what happens when we take our Fibonacci extension tool and we draw it off of the head down to the shoulder or the neckline. Notice how, gee whiz, look how close we came to that 200% right there. In essence, that is a replication of that trading range to the downside there. And that's one of the primary reasons why I like using this concept, that parking garage concept, is between 1.618 and 200%. Very high probability that we'll find some sort of support in there. Excellent application of that concept. And then as we've bottomed, we can start working our way higher. So we can do an extension study off of that range. And notice in this particular case, 1.272 played an important role. And quite often what I suggest to students is draw what's called a harmonic AB equals CD pattern. So we'll draw our first leg, the A to B, and then replicate this line and project that off of whatever the low is. And if you find that this A to B, so we can even here we can even write right on. Well, I guess we can just put A. Let's do it in nice big letters for you. B. C. And D. And quite often what works really well is if you can draw out an A, B, C, D, and then align it with a extension level, then that identifies a very important level going forward, and you can see how the market rallied into that level and then had to consolidate for a week or so following that to actually move higher. So there's a really good example. Head and shoulders top paints parking garage as price objective, 1.618 to 200%, and how that worked. And then on the way up, a harmonic A to B, C to D lines up with a very common 1.272 extension level to give you a price objective to the upside. And we can keep doing this the whole way up. You notice we did rally into this 127, so maybe you took profits. And then you were saying, well, you know, I don't think this is done. So we could draw an extension going from that low all the way up to that high. And notice there's parking garage right up into that level. So you could have had some reason to get long. There's a nice inside bar. There's probably a nice little double bottom breakout there. Huge volume move. You could have just, you know, market structure bought this breakout here, looking for levels to the upside. I suppose we could also do things like A, B, C, Ds off of this range. Maybe let's paint this, I don't know, teal. And we clone that. And you notice that this A, B, C, D actually lines up nicely with the 1.618 extension level. Right into that parking garage. So there's another way for you to use this Fibonacci tool. These are what are called Fibonacci extension levels.